Rivian Automotive Inc. is trading at $13.97 per share as of May 13, 2026, showing a slight intraday climb of 0.8% in a session characterized by cautious optimism. While the broader indices are grappling with shifting interest rate expectations, Rivian is carving out its own narrative, moving away from being just another struggling startup and toward becoming a vertically integrated titan. Most investors look at that $14 price tag and see a company that has lost a massive chunk of its value since the 2021 highs, but the reality on the ground in Normal, Illinois and Stanton Springs, Georgia tells a much deeper story. We are seeing a fundamental shift in how the market values electric vehicle production, moving from purely chasing delivery numbers to scrutinizing the actual cost of every bolt and battery cell. Rivian is currently exceeding the quiet expectations of the bears by managing to narrow its losses more effectively than many anticipated, especially after the massive $1 billion influx from Volkswagen. This isn't just a cash infusion, it is a validation of Rivian's software stack, which is now being licensed by one of the largest traditional automakers on the planet. The expectation in the retail space is that Rivian is constantly on the brink of a liquidity crisis. You see this on social media and in the more pessimistic individual brokerage circles, where people compare Rivian to the failed startups of the last decade. However, the reality is that the partnership with Volkswagen and the recent $4.5 billion Department of Energy loan application for the Georgia facility have built a massive financial bridge. This bridge leads directly to the R2 and R3 platforms. Those who are active in online investing through platforms like Robinhood or SoFi Invest often get caught up in the daily noise of Tesla stock versus Rivian stock, but the professional institutional activity we are seeing suggests a different focus. Big players using the Interactive Brokers platform are watching the production ramp of the R2, which recently started its initial assembly phases. This vehicle is the linchpin. If the R1 series was the proof of concept that proved Rivian could build a world-class luxury machine, the R2 is the vehicle that proves they can build a sustainable business. Recent trading volumes indicate that institutional interest is stabilizing. We aren't seeing the massive panic selling that characterized the early parts of 2024 or late 2025. Instead, there's a strategic accumulation happening in some of the more sophisticated sectors of the market. If you look at the Fidelity ETFs or the specific holdings within Schwab Intelligent portfolios, you'll notice that green energy and next-gen transport sectors are keeping Rivian as a high-conviction, albeit high-risk, play. The daily swings we've seen over the last week, moving between $13.50 and $14.50, are largely tied to macroeconomic pressures and the fluctuating price of lithium, rather than anything negative within Rivian's own walls. In fact, the recent announcement regarding an optimized capacity plan for the Georgia plant, which now targets 300,000 vehicles annually, is a massive signal of confidence. They aren't just trying to survive, they are building for a scale that would rival established luxury players. Comment below how many shares of Rivian stock you currently hold in your portfolio. It's always interesting to see the distribution between long-term holders and those just looking for a quick swing trade. When we talk about the technicals, the momentum in Nvidia stock often drags the whole innovation sector up or down, and Rivian has found itself caught in that gravity. But the specific catalyst for Rivian right now is its integration with the Uber network. The deployment of 50,000 fully autonomous robotaxis is a total departure from the adventure vehicle branding that the company started with. This is where the tension between expectation and reality gets really interesting. The market expects Rivian to be a niche player for wealthy campers. The reality is that Rivian is becoming a software and services provider. Their electronic control units and software joint venture with Volkswagen mean that every time a VW electric car is sold in the future, Rivian's intellectual property might be under the hood. This recurring revenue potential is something that isn't fully priced into the current $14 stock price. When you're doing your own online investment research, it's easy to miss these structural wins because they don't show up as a delivery number in the quarterly report. Rivian's business model is built on a skateboard platform. For those who need a refresher on the basics, this means they've engineered a modular chassis that houses the motors, battery, and suspension in one flat unit. This allows them to slap different bodies on top, like the R1T pickup, the R1 SUV, or the Amazon electric delivery vans, without having to redesign the core mechanicals every time. This efficiency is why Amazon, one of their largest owners, continues to rely on them for their last-mile delivery fleet. Since 2009, R.J. Scaringe has been obsessed with this vertical integration, and while it led to heavy losses early on, we are finally seeing the J-curve of profitability start to flatten out. The operating loss of $881 million in the last quarter sounds high, and it is, but it's a significant improvement from the multi-billion-dollar holes they were digging just a couple years ago. Investors using investing sites to compare Rivian to Apple stock or other tech giants might find the comparison odd, but Rivian is increasingly a software company that happens to have wheels. The way they handle over-the-air updates and the Rivian Adventure network of chargers mirrors the ecosystem approach that made Apple so dominant. If you are seeking investment help or looking for a self-investing strategy, you have to decide if you believe in the closed ecosystem model. Rivian is betting that by controlling the software, the charging, and the service, they can capture more value over the life of the vehicle than a traditional company like Ford or GM. This is a high-stakes gamble.
If their software has bugs or if their charging network doesn't scale, the whole thing falls apart. But so far, the hardware has been top tier, winning awards for safety and performance that have kept demand high despite the price increases we saw a few years back. Looking toward the future, the primary risk is no longer, will people buy these cars? The demand is clearly there. The risk is, can they build them profitably? The move to the Georgia plant in 2028 and the use of the $4.5 billion loan are the final pieces of that puzzle. If they can hit that 300,000 unit annual target, the economics of scale will finally kick in, potentially pushing Rivian toward a positive EBITDA. Catalyst-wise, keep an eye on any further updates regarding the R3X, which is the high-performance crossover that has generated a lot of buzz in the enthusiast community. Also, the expansion of the Uber Robotaxi partnership could provide a massive boost to their data collection capabilities, which is the oil of the 21st century. If you're managing your own Fidelity brokerage account or using the Fidelity mobile app to track your trades, these are the milestones that should trigger a reevaluation of your position. In summary, the story of Rivian is one where the narrative of a struggling startup is being replaced by the reality of a strategic, software-driven manufacturer. The market currently sees a stock that is down significantly from its peak, but the underlying business is arguably stronger than it has ever been. With the Volkswagen partnership providing a financial and technological safety net, the company is no longer just sailing blindly into an uncertain market. It has a clear, mapped-out path toward the R2 launch and mass market appeal. The contrast between the expectation of a liquidity crunch and the reality of a well-funded expansion is where the opportunity lies for the observant investor. Whether you are using a Fidelity trading platform or a Robinhood app, the key is to look past the daily noise and focus on the production efficiency that will ultimately define Rivian's place in the global automotive landscape. The tension is high, but for the first time in years, the road ahead looks like it might actually be paved. Keep a close watch on the Stanton Springs development. That is the true heartbeat of the company's next phase. If they can execute on that 300,000 vehicle promise, the current $14 price level will look very different in the rearview mirror. Stay sharp, keep your individual brokerage data updated, and remember that in the world of electric transport, the winners aren't just the ones who make the best cars, but the ones who build the best systems to support them. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.